Hey, let's get this recording started. So Monday's trash. There's actually not a single good setup on Monday. But that's okay because we're going to compensate for no setups on Monday by talking more about setups from Tuesday. So I guess if we're watching Monday, I guess maybe a chase play with a high here is the only setup you can take. And that's about it. And then Tuesday, we had a couple decent setups here. So we have this 1 minute long that formed, right? After price swept to London low, we got a pretty nice reaction. And then we got the inverse, and then this was a break-even trade. So let's focus on, I guess, the setup that actually worked from the New York AM session. And that was this nice little 30-second play that worked to the data low here, right? So when we get that, this is very high confidence, right? When we finally get that inverse, because this actually is a significant gap. It sends price to a higher high, and then we see this data low get put in. Data low is always a very good draw on liquidity. So even at all-time highs, we can target that. And if this wasn't 1-to-1 for you because you include the inception gap, you can obviously just target the low of day there. And then the last setup that I wanted to look at from Tuesday was, I believe, a 1 minute setup from the lows. So we get a 1 minute long after price comes down and runs all these lows to a 5 minute gap. And this was like decent displacement here off of price hitting that higher time frame. 4 hour, whatever. So this line that I've drawn here is the 5 minutes. This is where you go break even. And then you just target, like, I guess, like 1-to-1 here. Maybe you hold a little bit longer and then get break even on the rest. Overall, though, I think the best setup of the day was probably this 1 minute long off London. It just so happened that it was a break even. And then if we go to the next day, Wednesday, the best setup here was the 3 minute long that just worked out and, pumped everything. There was actually a lot of setups this morning that were valid. We had the initial, 1 minute / 3 minute long here. And this was scale plus break even. Then we had the short here. And then finally the long here that ended up working out. The reason why this long here was decent is because we'd established, a bullish bias throughout the morning. And I believe there was like a 5 minute or a 2 minute or some sort of gap here that was respected after we swept this low. And so, yeah, this was probably the long that was best because it ended up, obviously running everything and working out. But yeah, any of those long setups there were probably decent. I just didn't have a short bias, so I didn't take the short there. But this short was good because we had 10 a.m. reversal. Price came up, swept this high inside of the 1 hour gap here. There's a 1 hour gap. And then we had a very nice, reversal there with a lot of displacement. Specifically, the 2 minute there was probably the best. Take away the RR box. So yeah, 3 minute long there for Wednesday, but overall pretty good. And then Thursday, I think the play of the day happened during PM. This 15 minute long coming off of 4 hour 50%. So if we mark out the 4 hour range here from the high to the low, there's a bullish for value gap that price taps into when we, I believe, retrace to here. And if you look at where 50% is, you can see that price comes down, runs that, taps into the 4 hour gap, and then we get a nice little bullish 50-minute order block plus the inverse all in one candle. So we took this during PM, and then this ran for like 80 points. So this was very nice. And then the play of the day for Friday. Friday, we just pumped all morning, so there wasn't really a setup to get long here. But this 5 minute play off of price retracing to the 1 hour, tapping into that, and then getting this V-shape setup off the 1 hour there was pretty decent to retarget AM highs. So anytime you're going to see price tap into a 4 hour or 1 hour higher time frame gap and get nice displacement off of it, that's usually going to result in a nice little inverse play that'll work for at least 1 hour or to that first bearish untapped inefficiency, or vice versa if it's a short. So yeah, that's about it for iFVGs of the week. Quick one. I guess I'll take some time to answer questions or anything about that. I mean, I think normally what I'll do is I'll like write it down, but do I still trade the 15 second? Uh, Not really. I mean, the only time I will is if we're coming off of a like higher time frame sweep, and it's the only valid time frame, right? So like let's say like a 30-second gap gets closed, a 1 minute gap gets closed, but there's a very obvious 15 second. I might take that as like a turtle soup reaction to the higher time frame. Just represented on the lower time frame inverse. Confirmation only? No, I don't take confirmation 15 seconds. What do I think of the 30-second short after sweeping previous day low on Friday? I assume you meant previous day high if it's a short. I'm guessing this was previous day high here. So you mean this one? This is valid too. You can take either of these, and those are both fine. The reason why is because I believe there's a unfilled 15-minute below. And so when you get that much displacement to the downside, you can assume that price is going to come back to that inefficiency. Why are we all the way over here? Yeah, see, so this 15-minute gap here is what got tapped into, I believe, or maybe it wasn't unfilled. Maybe it was a 30-minute. I don't know. There was some inefficiency I thought that got tapped into there. Yeah. It might have been this one. Yeah, so it might have been the 15 there. So that initial pullback. Where was that 15-minute that you took the other day? It was it was Thursday. It was just during PM. We were reacting off 4-hour 50% in the 4-hour unfilled gap. Has PM been better than AM in the last month? I don't know. This was like the first good setup we got this week, I think. So it's been pretty mixed. I actually thought AM was better this week. What time frame are equal highs / lows valid in? Any time frame, but it's not necessarily the time frame that dictates whether or not equal highs or lows are valid. It's the structure that forms. So the best equal highs and lows are going to form as swing points. So something like this, right? If you see equal highs that form and they look like this, so like let's say we're putting in bullish structure and we have like an equal low that forms like this and then like this, and then that's your equal low. This is bad. These are not good equal lows. Okay? You want your equal highs and lows to be at obvious swing points. Or the only other acceptable equal low would be like, okay, price puts in bullish structure here, okay? And in our bullish structure, we form like a low here, like a wick forming a FVG, and then price retraces, and we form another low right at the low that forms the FVG. Okay, so this is your only other valid equal low, and the reason why is because whenever you're looking at equal highs or equal lows, you want to imagine, where price would have orders, like stop orders. And so whenever you have an inefficiency paired with a low, that's an area in price where there's two liquidity pools. So you have inefficiencies where price wasn't efficiently traded, and then you have stop orders. In the case of just like good equal highs and lows, you'll have two swing points or at the lows or the highs. And those will be two liquidity pools as well, but just in the form of two sets of stop orders at the exact same price level. On Thursday PM, Reliable straight up said, "This is a signal, take it law for the 15-minute." Yeah, I did say that. Was there a confirmation setup you could have taken Friday to get in on that 15-second? No, but what I did Friday is I just chased longs on eval and then got off. The further they are from each other, the better. Yes. The higher the time frame they are on, the better. So, if you see 4-hour equal highs or equal lows, those are good. 15, anything like that. Just swing points. There's kind of like a hierarchy to it. But side by side equal lows, like this. Oh wait, no, never mind. That's a London low. My bad. Side by side equal lows like this, not very good. Right? Even these ones aren't very good, right? Because do you see how the low here doesn't form at a swing point? It's just at a random low inside the range. The swing point is actually here. This isn't good. Even if it did form at the swing point here, it wouldn't be very good because if you go up the time frames, you're going to see that low disappear. So if you're thinking about like where the majority of orders are going to be, it's not going to be on the lower time frame. It's going to be on the higher the time frame you go, right? Because there are some people that only trade like the the higher time frame, like the 4 hour, the 1 hour. Some traders don't even trade the 1 minute. So when we're looking at the 1 minute here, expecting there to be orders, there's just going to be way less. When do you have more confidence in taking a 30-second iFVG? If we're reacting off of a sweep or a tap into an inefficiency. The 2 minute, what was that? Thursday? This would not have been a break-even trade. So your entry is here on the 2 minute, right? And then you go break even at the next gap above, and then price never wicks back to the 2 minute. And the goal here was to take the 1 minute. The reason why you don't need the 1 minute is because technically it's been established that price is bullish. So as long as we're holding, I believe it was this 5 minute gap, order flow is bullish, right? Kind of going back to this graphic. Let me grab it. That's going to be in the study channel, I believe. Why can't I find it? Here we go. So yeah, kind of coming back to this graphic, this idea. As long as price is holding this 5 minute bullish gap, order flow is continuously bullish, but structure changes on the lower time frame, kind of like here, right? We're seeing structure change. And so because order flow has already been established as bullish, you can take the soonest time frame inverse there. Honestly, I just didn't see the 2 minute there. And I figured, with the 1 minute looking as obviously as it did, and the momentum on the close, we would just end up getting the close over, and then we didn't. And then by the time that, I thought about taking just like the chase or whatever there, it had already hit the break even. So I was okay with just missing that trade. At the end of the day, we ended up catching 80 points towards the end of the day anyway. So even with missing this trade, if you guys end up missing an A+ textbook trade, there's always probably going to be a setup later in the session or the day that you can take. No, I didn't take yesterday's 15-second. How do I define bias? Bias is just draw plus order flow. Favorite color of cheese? I don't know. I have a favorite cheese. I like dude, there's so many good cheeses. What's my favorite cheese? I mean, you can't go wrong with Parmesan, I guess, right? Gouda's fine. Yeah, Gouda's good. What would be your approach if you only have 300 drawdown left on a 500K account? Or 50K funded? Laura, can you trade that account through news? Okay, so you can trade that account through news. You could always just full port news and I don't know, try and earn it back. But if there's consistency on that account, then it's probably not worth it. I don't know enough about the rules for your funded account. What prop firm is it? Apex? Okay, so you have a consistency rule of 780. So I don't know, like maybe full port and A+ setup, go for 2R. Then you have $1,000 left, and then just build that back up from there. I feel like 300 drawdown isn't enough to like make it worth it to try and like trade normally. But yeah, like full porting one good setup with the max drawdown is your risk, and if it loses, it just loses. How do you define your break-even point after entering the iFVG model? You go break-even at the first inefficiency or high, like internal high that you run into that would, I guess make price or order flow go neutral. But that's a little complicated. So basically, for that, the model for ease of use, for the easiest definition, we'll say that just go break even at that first high. That forms the swing high of the iFVG. So imagine each time you inverse an iFVG, it's on a swing, right? So you can identify that swing by looking at the 3 candle pattern ITH and ITL. Okay. If it's a short, obviously the ITL is where you go break even. If it's a long, obviously the high is where you go break even. So at that first ITH is where you go break even. For example, this 15 minute here, where I have the blue line drawn. Order flow is just the gaps that are being respected and disrespected. So bullish order flow is bullish gaps being respected, bearish gaps being disrespected. For example, here order flow switches bullish when price inverses this bearish gap because bearish gaps are being disrespected, and we're respecting this bullish 15-minute gap that we just put in here, right? When price comes back and wicks into it. So it just means that gaps that aren't being closed through. Proximity on iFVGs. Proximity is just like, okay, the closer we are to a draw, not even necessarily FVGs, but just in general, the closer we are to a draw, the more likely it is to be hit. Barring like obviously the hierarchy of draws. So like if there's a data high on the chart and we're very close to running LRLR, I'm not going to get married to the LRLR because the data high is the strongest draw in the market. So I'll take precedent even though the proximity of the LRLR may be closer. So if that is not an ITH but it's still a pivot point, you go to break even. So if it's not the only other scenario that you go break even at is if we tap into a inefficiency. So for example, with the 2-minute on Thursday, when we enter the 2-minute long, there's no ITH. That the ITH for this swing is actually up here, but this break even point is too far away, and we also have a roadblock in the way that price runs into before getting to this ITH. So in this scenario here for the inverse, you'd actually go break even at the next gap, right? So we inverse this first gap, we have a wick in the way. That first gap is where you go break even, right here. Okay, so this blue line. What's the order for hierarchy of draws from best to worst? I think it's data highs, higher time frame equal highs, like the good ones that we just mentioned, the swing point ones. Dodgy says LRLR next. I say higher time frame inefficiencies. I think they get hit more consistently compared to LRLR. Then I'd go LRLR. Then external liquidity, like just the highs or lows. Then like the sixth one is probably like lower time frame inefficiencies, like unfilled 5 minutes and that kind of thing, or shitty equal highs and equal lows. And then the last one is like internal lows and highs, so like internal high, internal low, that type of thing. Do you also think the first trade after New York Open coming from a Judas in favor of your bias is the best trade of the day? Probably. Aid. So that's where subjectivity comes into play. Honestly, like the break-even point thing is a little bit more complex than just like I could answer in an iFVGs like last week thing. Maybe you asked Dodgy about creating a break-even point class. But for me, yes, it will change depending on if there's like a high inside of a lower time frame gap, or if order flow switches neutral at any point on any time frame. So yeah. As far as iFVGs of the week, anybody have any like final questions about that? Wait for the confirmation, Laxman. Yes, this is being recorded. I'll upload it after this. Alrighty, guys. You have a great rest of your weekend. I will catch all of you on Monday. Peace out, everyone.